We can't see how many of you there are, which may be a blessing. But I guess first off, sort of the second last slot of the day. It's been a fantastic conference, first conference. So congratulations to Alex and team. We're here to talk about fundraising in Europe. So a quick show of hands. How many entrepreneurs are there in the audience? Okay, and how many of you have already raised institutional capital before? Okay, so most of the entrepreneurs haven't. And of the ones who haven't, how many of you are going to raise money in the next year? Okay, most of you. Okay, so we're on topic. Cool. So we'll quickly introduce ourselves. Joss White.
Yeah, thanks, Mike. My name is Joss White. I was on an earlier panel, so to be very brief. I'm an entrepreneur turned investor, founded 3 tech companies. Most recent one was Message Labs, which was an early SaaS business, antivirus, anti-spam in the cloud, which we sold in 2008. And then I set up Notion Capital as a VC based in London, investing in Europe with 3 other guys. And we very much focus on SaaS and seed and Series A stage.
Hi, Conor, Stanley, entrepreneur turned investor, also founder of Tribal.vc here in Dublin. We set up about 3 years ago to invest in software business, mainly SaaS companies, originating in Ireland, mainly in enterprise software. So we've backed about 15 companies to date, kind of seed to Series A space.
Sitar, Teli with the Connect Ventures. I've been a VC for 11 years. And we do seed in both consumer and B2B. Done quite a few SaaS companies. And we focus a lot on companies that have a strong emphasis on product and user experience.
Hi, my name is Dibner. I've been a VC for just over a decade, working with some large funds. About a year ago, I set up an Angelist Syndicate, which is to back European and Israeli enterprise technology startups. A lot of that is SaaS, writing 250K checks as part of larger rounds.
Cool, thank you, Gil. So I'm Mike Chalfen. I'm from Mosaic Ventures. It's what the T-shirt is. We are, yesterday, 2 years since our launch. We're a Series A focused fund in London. We invest across Europe, and of our first 13 investments, 4 have been in SaaS startups. So it's an area of focus for us. And we are looking for, unusually for a VC, we're looking for very, very large, potentially large outcomes. So that's sort of one of the things we look for, which it's unusual in a VC panel not to have said that. So I'll take that slot. Okay, we're going to open with just, we're not going to spend a long time on sort of how to raise capital. We're going to find some other topics to discuss, but just briefly wanted to talk about how to raise seed capital and Series A capital initially, and Sitar's going to kick us off.
Sure. So we do a lot of seed, and when we look at SaaS companies, we'll fund them at a variety of stages, even within seed. So we've done SaaS companies that are pre-product. We've done SaaS companies that are already generating maybe 5-10K in MRR. So it varies quite a bit. Because of our very strong product focus, that's really a strong filter for us. So we look for companies that have demonstrated, either with their current product or with previous products, that they understand user experience and design really well. And that they're solving a problem and there's a potential for product market fit. So we're really comfortable with not being at product market fit. And I think raising seed capital for SaaS has historically in Europe been a bit difficult. I think it's been underfunded quite a bit at the seed level. And it's one of the topics we're going to talk about later is, whether it's still being underfunded, I think, and why that may have caused a lack of larger companies here.
Okay. And in terms of raising seed capital specifically, I mean, if you had to pick out one thing in addition to what you just described for a sort of more generic piece of advice for raising seed capital, is there anything you'd pick out?
I mean, I think it's quite hard, right? Because in SaaS, oftentimes you are expecting to generate revenue, and so we'll have, and I think a lot of entrepreneurs do this. They'll come in and they'll say, we need X amount of money because we're going to generate revenue in like 6 months. And I would recommend you don't do that. Assume that you aren't going to generate revenue over your seed round. You probably will, but what you'd like to do, but what I think is best for companies to do is to raise amount of money that lets them really build for 18 months, and then if you get revenue on top of that, that just is a bonus. But you have enough money that you don't have to worry or panic about whether or not you're generating MRR.
Okay, cool. So on Series A, so where we focus at Mosaic, when we vote on a deal as a partnership, we vote on 4 dimensions, which aren't necessarily unique to Series A, but just to share that with you, it's sort of the market, which really relates to the scale of opportunity and the vision, the team. We're very sort of mission-driven founders who are sort of completely committed to what they're trying to achieve and how they're trying to change the market. Product, and then just the deal itself. So those are some basic things we're trying to cover. But the key thing when you're raising a Series A is you're not really experimental in at least some way. So you know, at least you have a hypothesis about where you want to commit resources, which doesn't mean that you've got product market fit and it's off to the races, but you have a good reason to commit millions of dollars of resources, as Series A's typically are, to building your company. And there's a sort of sharpness and clarity that comes with that that's very, very important in what we look for, and I think most Series A investors would also look for. And my top tip for what it's worth is, know your deck cold, send it in advance, and if you have to refer to a page, great, but just have a conversation with the investor, who preferably, after you've taken seed capital, there's a big target on your back saying this is a company that a good seed investor, of which there are four here, good seed investor has determined that this company could make it. So you should be identifying which Series A investors you might want to do business with and start to spend time with them, and partly to help them get comfortable with you, but specifically so you can decide who you really want to speak to first when you're ready. Okay, so we're going to move on a little bit from those sorts of basics, sort of one to the market context. So SaaS market was obviously very, very frothy. I say very obviously. I think it was very frothy for much of the last couple of years. Conor, has it changed?
I think at seed level it's changed a little bit, and that's been kind of influenced by what's happening at Series A having an impact on seed.
Yeah.
So what we're seeing in the market is the bar being sort of raised quite high for Series A, and not many companies going from, if any, going from seed directly to Series A. So you've got all of this kind of interim rounds, so pre-seed or sort of post-seed, seed plus, pre-A. So that's kind of a feature of the market at the moment. And I think as a consequence of that, I think we're more interested in investing in kind of larger seed rounds just to make sure our companies are getting out the far side, certainly in terms of kind of MMR traction anyway.
Okay, and Josh, do you want to amplify any of that regard just focusing on A?
Yeah, I mean, I think the SaaS market is slightly overheated. I mean, the public markets, which is normally a proxy and trickles down into the private markets. There's been a couple of dips in the public markets for SaaS companies early this year and then middle of last year as well. But generally, the multiples and the valuations have recovered again, and I think we've seen the same kind of recovery in the private markets. But I think it's more of a problem of discrimination. I think we were talking about it earlier.
Yeah.
So I think for the best companies, that can be number 1 or 2 in their market that are growing rapidly with high margins. I think they can absolutely justify the sort of 5, 6, 7, 8 times multiple. But I think it's more the Me Too companies who really don't have the opportunity to be number 1 or number 2 and don't have some of that same quality about them, where I think that the market is unrealistic. Yeah.
But at Series A, are you really pricing it on revenue?
I think it's a reference point. Yeah. We don't look exclusively at that, and in some ways I'd rather we look less at that actually, but it's just something that's there, that's solid, that you can compare to later stage companies, you can compare to public companies. So for us it's a reference point, but it's not more than that.
I mean, for us, the pace of growth matters more than the number.
Right.
within kind of reason. So how, in terms of the changes in the market that we were just talking about, have the changes in Europe been any different to the changes in the US? Gil, you spend a lot of time in the US. Do you want to comment?
Yeah, I mean, I think when I was working in Israel, that we would pretty much know that we were 6 months behind the US at least in terms of understanding market trends and so on. I think that's true in Europe as well. I think Europe is 6 to 12 months behind the US in terms of realizing that slowdowns are happening or valuations are changing. I think also Europe compared to the US was, I think, relatively late to get on the SaaS bandwagon. And I try to be a little bit controversial maybe. I'm not sure there's as deep an understanding on this side of the Atlantic as to what SaaS actually means and represents. I think there's a bit of a formulaic approach to SaaS in Europe that you don't get in the US. I think SaaS is a tool, right? SaaS is a model for how you grow a company, how you grow revenues, how you deliver a product, how customers pay for products, but it in and of itself is not an investment thesis. And metrics, I think SaaS has built this culture of metrics, and there's all these blogs you can read, this metric and this ratio, and if this ratio is above this number, then you're fine. None of that is actually true, because venture funds, in order to return to their LPs, need to achieve these massive outcomes. Any venture fund worth its salt needs to be able to return its entire fund size from a single investment, which gives you a sense of the scale that you need to achieve. And the SaaS toolkit is useful for getting there, but it's not enough to get there. And I think what I notice in Europe as opposed to the US is I think there's this tendency in Europe to look at, solid execution on SaaS metrics and good reporting and reasonable growth is enough to justify a financing event. And I think in the US that's just not true. The better funds just won't do that. But both in the US and in Europe, there's a whole range of funds and investors. And so I think entrepreneurs are seeing all kinds of things get financed that I would argue probably shouldn't get financed. And then that's changing the way they think about what metrics need to be.
And just to sort of explore that a little bit further as a group, we've talked when we were preparing for the panel about the lack of breakthrough companies in Europe relatively. So, just to sort of, to make a suggestion, it sort of feels like one of the reasons that, even good investors here who do understand SaaS are sort of aware that Europe hasn't been as fertile ground than the US, is that there have been fewer breakthrough companies natively here. But they have existed, and just set one up. But let's explore why that is and sort of get into the our collective mindset so that the entrepreneurs in the room can understand sort of why there's a degree of skepticism, although please be assured we're all believers constitutionally, like we want to believe. Conor, do you want to start?
Yeah, I think it's probably just market driven mainly, and I think so our companies sort of focus in on sort of the bi-coast of the US in terms of getting into customers. So I just think the US is significantly ahead on the kind of SaaS adoption curve among mid-market, right up to now to the kind of Fortune 1000. So I think it's just we're at a disadvantage. European founders have to make the transition. There's arguments about when they should do that, but ultimately they have to do that, and European companies have to get out over to the US. So I think we are well behind in terms. You took the corporates in terms of the IT stack is kind of being rebuilt in the US, and US enterprises are driving that, and you've got all of the acquisitions of SaaS companies happening by the tech players. We just don't have that same footprint over here.
So it's customer adoption is a barrier.
Yeah.
Okay. Yeah. What about capital, Joss?
Well, I think US startups can definitely raise more money. I think that US-based VCs generally take a kind of a top-down approach. So they'll look at the growth, they'll look at the quality of the product, and they'll look at the overall kind of potential. Whereas I think European investors are more cautious and they're more interested in the metrics and the downside protection. So I think as a US company, you can raise more money. You can have access to a bigger sort of homogenized market. Europe's this bigger market overall, but it's a very different thing to be trying to access Europe across all the different languages and cultures as compared to the US, which is just one big market, same language, same currency, and it's more developed in terms of the internet adoption. Okay. And I think just, part of it's just a function of time. Great technology hubs are driven by recycling. And, people are successful and then those skills and that money and everything else gets recycled back into the ecosystem, and then that allows it to grow, and layer upon layer it grows. And Europe's just been doing it for less time, so we just don't have so much of that recycling in place. So, they would be a few of the reasons that I'd give, but I think the gap is starting to close, and less so on SaaS as compared to B2C, but I think that you'll see more SaaS, real global leaders emerging from Europe, and I think there's many in the pipeline.
Okay, so just to peel about a couple of different themes there. One is sort of access to capital, whether recycled or invested sort of for the first time. Gil, why don't you give us your view of that?
As you could probably tell, I grew up in the States, and I worked in Israel for a while. And the Israeli ecosystem, I probably don't have to tell you, is just an outstanding tech ecosystem. And just a few points from that experience I think might be useful to the SaaS founders of the audience. No Israeli founder ever woke up in the morning and said, my dream is to build a big Israeli company. That's a tiny market. It's not even part of Europe. It's isolated. It's 6,000 miles from any other real market. They all say, I'm going to build an American company or a global company. They all have pitch decks in English. They're all flying to the Valley constantly. So, while it's, I think, academically interesting to talk about, this ecosystem or that ecosystem and what the constraints are, the absolute best founders that I meet all over Europe, just don't think about it in terms of, I'm a European founder, what does that mean for me? They think about, I'm trying to build a really big global business. And I think, as an investor, any one of us, my mandate is not to support any particular ecosystem. My mandate is to make money for my investors by finding companies that are going to grow really fast. And what I've noticed is that those companies are highly, highly correlated with founders that don't think in these kind of geographic silos, that wake up in the morning and they, okay, where's my market? Where are my early adopters concentrated? If it's New York, I'm going to New York. If it's California, I'm going to California. If I need to hire this guy in Texas, I'll hire that guy in Texas. And that's how the best founders that I know think. And I would say that if you're just play a global game from the moment you wake up in the morning. If you can execute that global game from Dublin, as a bunch of companies are doing, then great. And if you feel like you have to relocate or find investors somewhere else or go to London to meet Mike or go to California to meet someone else, you can do that, right? Just don't think about it that way. Think about growth all the time and sustainable growth and getting ready for the next round, and just don't worry about the geography thing.
And Sitar, just going back to the capital point as well, do you agree that that sort of ambitious founder can build a very large business without raising the ton of capital that Josh described?
Without the ton of capital?
Yeah.
Josh described. I think it depends on the founder and their sort of outlook and their attitude. I think leanness is something that companies lose over time, unfortunately. And so as they raise money, they seem to want to spend the money. And you oftentimes get into these rounds where they raise far more money than they need, which is fine so long as you remember you don't actually need to spend it. But then all of a sudden, what was a $7 million plan becomes a $15 million plan, and you've spent that in the same period of time. You really were only going to spend $7 million, and you don't necessarily have a different result at the end of the 2 years. And then now you have to raise money, and because you've now structured the company in a way that is fatter, and takes more money to run, your next round now becomes larger and larger. And I don't know that it's always a need that you have to raise money, yes, to build a large company. I don't know if you need to raise as much money as companies do. And they see companies, they start spending money on things like, offices and perks, and all of a sudden they have, just massive customer support teams that don't necessarily need to be there. It's just they have the money to spend, and they don't think about being efficient anymore.
One of the other themes that we've touched on, sorry to move on, is global expansion has sort of been touched on in different ways here. Which, one of the things that feeds into that is the business model you've got, and are you addressing, or the segment of the market you're addressing, the size of customer. How important is a plan for global expansion as when you assess a SaaS startup? And Conor, why don't you take that?
I think maybe taking up on Gil, you go where the market is, and in terms of your route to market, it's really just about customer acquisition efficiency, really, in terms of where can I go and get those customers that I think are gonna buy really early. So we kind of focus in on that side in terms of enterprise software. We don't really do SMB too much. So it's getting out, getting into the market, and then getting 10 customers, building your product roadmap out with them, using that to expand out, and then coming back to the funding piece, this is the best companies we're seeing are getting to kind of close to cash flow neutral and raising on the back of that kind of strength. But like I think the global expansion bit, I think for us it's really about tackling those kind of key US markets, particularly in enterprise software. I don't think they have to go global from day one. That really comes at a much later stage.
Okay. I want to sort of switch tack a little bit to something that I think is probably underestimated when people talk about SaaS businesses. And Gil sort of preempted the discussion to a degree with his comments on, because SaaS metrics are things that everyone understands, it's sort of commonly written about. There's a lot of focus on that. When we're looking at startups, at whatever stage we're investing, how important is the tech and the vision? That's sort of what I wanted to touch on. And I completely agree with everything you said, Gil, by the way. So, Conor, if anyone can talk about sort of, Gil, why don't you start us on that?
For me, just to segue, one is like, in terms of globalness, I won't even invest at all if the company isn't already global, not just has a plan, but is already global. And on tech, I think this can't be overemphasized. I think barriers to entry are the key to sustainable returns for entrepreneurs and for investors. That is what the game is about. SaaS is not a barrier to entry. So tech for me is absolutely essential. And I think a lot of noise has been made about how it's cheaper to start a company ever before. Well, guess what? It's cheaper for everyone to start a company than ever before. So fundamentally, your company is worth less. That's just a fact. So technology becomes the only equalizer, the only weapon you have to actually build a gap between you and your competition. Execution, obviously, but execution, you can hire that. You can improve that. Technology is the actual only weapon.
Go on.
So we also do a lot of SaaS. We do it at a different markets it. So we do a lot of SME SaaS, but we've done some enterprise as well. And I think while we do look sometimes at technology, I think our fundamental thesis is that actually design and user experience is also a strong differentiator. And it's not something people can copy. Sure. And it's not something that you can buy in. Like if it's not part of the founder's view of life, it's not going to be part of the company's view of life. And it is as strong a differentiator as technology can be. And if you look at some of the strongest companies, especially in SME SaaS, eventually I think all companies at scale need to have technology. They need to be technology companies. They all become technology companies. All consumer companies at scale become technology companies. And if they don't, you start seeing them break down. I think that's one of the issues you see with companies like Twitter and some of the others is they're fundamentally not technology companies the way other companies are. But being a design and user experience-led company, I think, is as strong, and that's actually one of the things we look for quite a bit.
Okay.
I think on the vision, and it's such a sort of obvious point, but I'd really like to see a founder just be able to articulate their vision very crisply to a point where you can just get it straight away. And it seems like an easy thing to do, but it's remarkable how few can really do that in a way that's clear and compelling. And so I would definitely give that as a word of advice. I think it's an important part of it.
Yeah.
Cool. I actually think, to Gil's point, I think far too many founders of SaaS companies focus on the KPIs and metrics in their pitch. And their pitch is basically, these are our metrics. With money, the metrics will become this. The scale will become this. And it's not particularly exciting. And you can see the revenue grow, but you can't see how it'll fundamentally change any part of the market. And I don't know if it's a cultural thing or if it's just the specific founders, but you oftentimes are left with the feeling that you're not really, what VCs like to do, I think, is invest in something that is big and that is impactful, because big impactful things are what lead to the biggest returns. And if you're coming in and just pitching metrics and not vision, it's just really hard to get excited about the company.
Yeah, I mean, one of the things I'd say to be honest about with yourselves, and hopefully you're in a position to assess this, is sort of the question of, it's great if you can raise money, but actually you're going to have to rebuild your product and your stack within the first year or 18 months of raising this money, because if you are, that's actually possibly a sign you shouldn't raise the money yet. You should be rebuilding already. But we do hear kind of companies who have raised significant capital who have actually on that capital stalled really as they had to rebuild mid-flight, and that's a sign. That's a sign that both the investor and the team underestimated the tech importance. Go on, Conor.
I think just coming back to Gil's point on the tech, one thing we see is, okay, the initial tech is important, but an understanding that technology is a competitive advantage over time. So, we spend a bit of time looking at the roadmap of the product and where it can get to. And as long as the founders understand that it's that, the upfront technology mightn't be that compelling, but ultimately over time, the company are building barriers to entry, great partnerships with other tech companies, or, all of these kind of layers on top that ultimately get them to where they need to get to.
Just to give you a real softball, how important to you learning that was the experience of investing early in Intercom?
I was quite, I suppose like with Intercom, I kind of knew the guys, so it was an angel investment. I'd known Owen from
very honest answer.
Yeah.
Okay, so just in the last couple of minutes, because we'd like to have a couple of minutes for one or two questions. But in the last couple of minutes, if we could start, Joss, with what happens after SaaS? What next?
Well, the way I think about it is that software as a service in itself now just seems like a sort of fairly passive thing. And I think we saw it with the Microsoft acquisition of LinkedIn. I think what you're going to see increasingly is software infused with data. And so then I like to call that intelligent software. And then the software that's infused with data, and then you apply machine learning, which can actually make more and more sense of that data, turn it into more and more value without any specific programming. It gets better over time. So I think you've got the combination of software, data, machine learning, and you've got this future of intelligent software, which takes it a whole stage further beyond what I'd describe as fairly passive software, which requires the data to be inputted and just seems fairly rudimentary with the way that we're going. That's kind of the way that I see the world going.
Gil, do you want to give us your summary of the future? Or what you would look for?
I think as a guy who's invested in a lot of sort of the IT stack and now the SaaS opportunity, the first thing I'd say is this actually does keep me up at night. I was having a very angst-ridden conversation with another VC colleague because
not last
I'm not sure I know what comes after SaaS, right? SaaS is such a dominant model and such an efficient delivery mechanism for software value that it's kind of hard to imagine what the model is after that. I think APIs is something that I think is really interesting, and there are certain cases, including my portfolio, where people are delivering via an API what used to be delivered via SaaS. And I think developers as consumers of if you believe in the software is eating the world thesis, then you kind of believe in the corollary, which is that, well, the developers then sort of eat business users because more and more of a business's value will be expressed by code they wrote themselves, and so APIs can take part of that. That's probably the best I can do right now. I believe in the AI thing, I believe in data, but I'm very skeptical, by the way, of sort of AI or public data as drivers of value because AI algorithms are off the shelf and public data is public. So I think the value really comes, in my mind, from proprietary data. So software solutions that create new data or can theoretically take old data in a new way, that's really interesting.
Okay, so the reason we've gone into that was just to give you a sense of what we mean by sort of vision, and we're looking for more than just the metrics. So hopefully that's helpful. In the last minute or so, can we just take a question or two, if anyone has any? And you can direct it at one of us. Please go ahead.
Yeah, sure. So you were talking about barriers to entry to technology. How do you think open source software is influencing SaaS? Because it lowers the barrier, obviously.
Yeah.
Would you invest in an open source company?
I have, and I continue to do it. The best I can do on open source is I think open source is another weapon in your toolkit, right? And I think there's a couple of different ways you can deploy that weapon, but you've got to ultimately show how your open source strategy is going to drive the growth of something that somebody will pay for.
Yeah, we've also invested in open source and would do so. It's about, as Gil says, it's a weapon, but it's a competitive weapon, and it's a way of leveling the playing field against tremendous incumbents. You just remove their advantage in one way or another. Anyone else? Okay, I think we might be out of time. Yeah, time's up. Big orange sign. Thank you very much. Thank you very much, panelists.